Awesome. So I streamed like for a little bit. Half our viewers literally liked up the like button so much. My laptop died. I had to come back on. We had over 50% of the viewers like the like button. Like I really do appreciate the community and the support, even though we're really small right now. So, like I said before, in Bitcoin, we're trading this consolidation trend. I don't even know what you would call that. It's not a symmetrical triangle. It's not, you know, I don't even know what you'd call that. But that's where we're at with the consolidation pattern in Bitcoin. Let's take a look at ETH. And then I'm just basically going to just summarize what I said in the last 30 minutes. Basically, we've been doing good on an ETH trade. The only concern that I have, I kind of have the same view as pretty much every other major crypto channel. I do think that ETH is heavily undervalued based off its fundamentals. There is a key chart that we're going to be looking at. Like I said, I did call the bottom right here as opposed to any other YouTube channel. We've been going over this chart for a long time. We've been looking at that chart for a long time. So I talked about that a little bit earlier. And then the other thing, just so you guys are all caught up. See, that's Kraken, and it should be Coin. No, it's Bybit. Yeah. And then this is the channel that we're looking at again with ETH. So I have these two, and these are basically going to be take profit areas for me. And then the funding rate on Bybit ends in I think 6 or 5 hours. So I got to make up decisions on whether I want to keep my trade open or not. For all the guys on high leverage, I mean, it's just one of those things, you know what I mean? Like, especially with a swing trade, you got to think about on leverage. Like, it might not necessarily be that you get liquidated, but it's going to be high on leverage. Now, we were extremely profitable, I bought heavy at that dip, but, I didn't have any more money. Like, I didn't have any more money to invest in ETH. I literally drained my bank account, so I had to put collateral against what I already had and take out that leveraged long swing trade and add to the position I already had. So that, I mean, it's doing good. It's not like we're losing money on the funding rate. It's just cutting into our profit margin. And like I said, I just am looking for a small amount of that, taking some off the table, possibly on this next trade, and then leaving some of it in if I want to get back in, like we talked about earlier, and then nice. So you see that touch point right there. There's a lot of touch points, but I got to line that up perfectly. Boom. Boom. Yeah, so we're in this channel right here. Could go either way. It is going to be absolutely massively positive if we break this channel that we're in right here. We've been in this entire thing for a while, and it's been pretty accurate, but that's Bitcoin dominance. Take another quick look at crypto market cap. Total. So yeah, I'm going to be streaming for a while tonight. I really do appreciate the support a lot. So this is really good. It's looking really good. Nothing really to complain about at all. Just what you're going to notice that I want to bring to your attention is that we usually cruise to this line right here and then find support on it. So, I mean, we can come back down and find support on it. It doesn't look like that's going to be the case, but you see that constantly, that this is a very favorable line, and then when we break below it, price action tends to dump, and so we're just looking really good right now. Let's see, so that's total Bitcoin. ADA is looking good. I really wish it would have pulled back more. So actually, I never really hear people talk about this, but Cardano is just such a good crypto. I'm like, do people just realize that Cardano is about to destroy Ethereum, and that's why Ethereum's not pumping? We talk about the paradox effect a lot, but I'm like, do they know? Do they know about Cardano about to just absolutely murk ETH? But, it's like what the market's always saying. The market's always saying, the market's always saying, oh, but you know, Cardano doesn't have, it's all fairy tale because it doesn't have, oh crap, we lost. I gotta fund my account again. Let's see. Let's look at ETH, USD. I wish this came with more Fibonacci extension levels. It's already maxed out right here. Let's see. Let's go to our favorite chart. Oh, so I have a really big chart I want to bring your attention to. Let's just take a look at this chart, and then I have another really big one that I've been wanting to look at for a while on this channel with you guys. So this is ETH.D. So this is like BTC.D, but this is ETH.D. So we're looking at this Fibonacci level possibly to come down to. We're looking at, yeah, I mean, there's not a lot to look at. It's very bearish, but could be reversing. Although you look at this fractal idea right here, and it's like, oh, it comes up, down, comes up, down, comes up, down. So, and that's ETH dominance, so not looking too hot. And I think a lot of money's just going into altcoins, but let's take a look at ETH/BTC. This is really what I've been wanting to look at with you guys for a while. Does this one have a lot of liquidity in it? Oh, wow, that's surprising. All right. And then let's go on a higher time frame. Something big like this, yes. And so what is this? You know, a lot of people look at, you know, US dollar to ETH and they're like, why is Ethereum dumping? Like, what's going on with ETH? And you got to look at some other stuff that we look at in cryptocurrency. One of the biggest things is a lot of guys in crypto, they all have one thing in common. They all hate USD, US dollars, as far as a store of how they want to store their monetary purchasing power. And so a lot of guys don't actually sell crypto. What they will end up doing is sell some of their Bitcoin and maybe move it into a more promising coin like Ethereum or vice versa. And so we get these comparative charts where you're comparing not a fiat currency like the US dollar index, the DXY or the USD compared to Bitcoin. You get two cryptocurrencies compared to each other, and it's just not faring well right now for Ethereum, and everybody's like, why? And this is a massive reason why. And so right now we have a clear double top when we zoom out. Let's see, horizontal line. We're going to get this line right here. Boom. And we're going to delete that measured move. And then you have this top right here, which you could technically measure, but it looks like it's already pretty much played out right there. And then you have massive, do we have VPR support on here? I don't need, I will say Bollinger Bands for later. I don't want to say I don't need them. We can use EMAs instead. Okay. Bummer. Alright, well, you have this right here, which is constant resistance. Let's take a look at this and see if we can line anything up. Oh, this one lines up perfectly. This one lines up perfectly with our measured move. And so does this one, it looks like. Yeah, this one too. So we could actually hit this perfectly. Is there another touch point that... No. But yeah, something like this line right here, or finding support on this level right here. So let's see. So come down. It should be right here, trading channel. And then mostly what you're going to want to look for is right here to right here. We're going to put that like this. Measure it out a little bit more. So like this, let's see. So like the top's right here. Yeah, like perfectly right there. Looks good. And then, yeah, that looks really good right there. And it looks like you see this right here. So this is resistance, resistance. And if you look at the same area on the x-axis, you see support, support right there. So that's massive. Let's see. So yeah, you have support, support right there. But we could, so it looks like we could hit support right here. And if we bounce this off as support and we get a nice bounce right here, this could be absolutely massive for our favorite cryptocurrency right now. Well, our favorite cryptocurrency is Cardano. We already know that, but you know what I mean. The one that we have most of our position delegated to right now, Ethereum, the one that's tried and proven, and a lot of the guys that don't know anything about crypto, they're just going to plop their money into Ethereum because it's so undervalued compared to Bitcoin. So you guys know what I mean. So if we get a massive wick right here, that would be absolutely massive for Ethereum. So that's really what we're looking for right now, is a reversal. And we just want to see volume, which it looks like there's not volume right here yet, but potentially it looks like this, it could be support. We're looking for a bounce. If not a bounce right here, then we're going to be looking for a bounce at these levels right here in between this resistance box, support box potentially. Yeah, I got to redraw this. This is always resistance. So we always put the support boxes as green. There we go. And then let's take a look at, let's get this chart going. I like color coding the charts too. It's so fun. All right, so right here, this could definitely, you see this as resistance, you see this as resistance. So we're going to make this line red. We're going to fill that in like that. This could definitely be right here or right here. This definitely could come up. The pairing could definitely come up right here, hit this area, and then consolidate. Or so this is definitely a resistance area. This is definitely our support area. Potentially, you know what I mean? We'll see how the price action interacts with it. And it looks like it does have a lot of history. This is definitely a scam wick. Yeah, what the heck is that? What the heck is that? But it looks like it does have a history in these levels right here. And if we're going to go to right here, and then we're going to zoom out onto the, we're on the daily, so we want to go to the weekly. Perfect. And then that's going to computer generate the highest support resistance areas for the higher time frames. Yeah, and it looks like these are going to be the main areas right here. I was looking to back test some of this, but as you go higher up in the time frames, it's not as relevant. Nice. All right, so yeah, that's what we're looking at right now. We have a double top playing out right now on this level. There's temporary support. This is going to be the measured move. What it seems like is that we're going to hit this measured move and then bounce. And then if we do time that perfectly, I mean, a lot of guys are looking at the USD compared to ETH paradigm, and they're like, why is my trade not doing good? Like, what's going on? Actually, we did see a nice bounce actually on ETH, and ETH actually did break away from Bitcoin and is actually outperforming Bitcoin today. And people just don't understand it. And like I said on this channel, it's like If there's something that you don't understand in crypto or whatever, it's most likely it comes down to an educational factor. You know what I'm saying? So the reason we broke away a lot is because we have that nice bounce right there on the comparative charts. So I mean, fundamentally, ETH is just looking absolutely incredible. It's on the weekly, looking absolute straight gorgy. Let's see. So that's the weekly. Okay, the daily. There's nothing, I always show you guys, like we called the, bottom right there, but I'll show you guys when these charts are relevant, because this is relevant. We do have a lot of really good stuff to go over there, but that is on Kraken, so we're going to want to go Coinbase. Let's see. Trying to think, is there any way to... Oh yeah, this is what I want to do for sure. This is what I want to do. Check this out. So we're going to go to Bybit. We're going to go to the daily chart right here. And you guys know that we have this massive channel that we're looking at that is absolutely monumental. And there's very, very clear touch points on these, not on the daily, but... Or is it on the daily? It looks like there might even be touch points on the daily. Guys, this is huge. Okay, sorry, I'm getting tired. Let's see, 1, 2, it looks like 3 on this one right here. Very valid trend line right there. And then on the lower, I was watching some guy that had 50K subs, and he was saying a trend line is the distance between 2 points. That's what they say in Forex, but like if you think about it, then it's not really a trend if it's just 2 random points. For it to be a trend, it would have to be 3 points. 1, 2, 3 on the daily, baby. All right, so you guys know that this is a very valid trend, because not only do we have 3 touch points, because we know how to accurately do technical analysis. I don't know how, like, sometimes I just look at other people's subs and I'm like, guys, come over here, like I can actually help you. Like, how does this guy have 50 subs and he's saying that you draw trend lines and consolidation patterns with 2 touch points? Like, that's like the most basic technical analysis you can get into. All right, so Fibonacci channel. And then we're going to do this. And then this. And then this. Gorgeous. Boom. And then is that line up right? Oh, this is backwards, right? Yeah, this is backwards. See, guys, I know what I'm doing. I might not have done it right the first time, but I know what I did wrong. Alright, boom. Boom. And we'll go, this is the daily, so this would probably be like right here. And then touch points are going to be right here. Why is the... Maybe it was the other way. Yeah, it's one of those trend-based. That's so weird. The golden pocket is just... I think not sure. Because if you put that right there, that's not right. So weird. Yeah, you would draw like that. Do you guys understand like what I'm looking at here? Like what the big deal is? That's not normal fib. This is literally the Fibonacci backwards. Let me draw a regular Fibonacci so I can tell you guys why I'm tripping so much. So this is like the standard Fibonacci retracement that everybody's like so comfortable with. You have this area right here, which is a space in between. You have the 1 and then the 0.76. And then right here, you just don't have that. So I'm like, what the heck? Like this line right here, we're missing this entire piece. And then as you see, it goes 0.76. So that's the first one. And where this is the bottom one. But if you, but anyways. It's looking good. It's looking really good. I like this a lot. So let's go to the 1 hour chart and look at our gorgeous channel. So these have been very accurate before. We're not seeing any high correlations right now, but what I am seeing is definitely on the 1 hour, we can definitely draw this, it looks like. So we're going to go to trend line. And then, so this isn't, is this a valid right here? Doesn't look like there's any valid trends. Maybe this one right here, potentially. This one. I gotta make the line thinner, so. Right here. Is that it? You never want to like force the trend lines, because then that's just bad for trading. Like it's like you can force them, but the only person that you're going to be fooling if you force them is yourself, and then you're putting up your capital, so you're kind of just, yeah, it doesn't look like that's going to be a valid trend line. I'm going to keep it, and here's why I'm going to keep it, but I'm going to keep it as an invalid trend line. So this is why I'm keeping it though, because these levels are highly correlated. Like this area of movement is highly correlated. So even though I'm just gonna leave it and tell you guys that this isn't a valid trend line, don't base a breakout trade based off this, but we can still look at this as a potential trend line, if that makes sense. It should. Because as far as like lines go on the chart, like that's really all we can draw is that. You know what I'm saying? Like, and then I'm going to draw one other one, which isn't also going to be a valid trend line, but it is an area that's going to have to be broken, which I'm going to talk about in a second, which we draw a lot. All right, so you have this area right here, and you have right here. 1, 2. One, 2. All right, cool. So neither of these are valid trend lines, but I have to draw them because we have to have something to look at. You know, we have to have an idea. So they're not valid, but they are valid at the same time. So these aren't valid trend lines, and so this isn't a valid consolidation pattern. This isn't a descending triangle. This isn't, whatever. But we still have to draw it, and Ethereum's price still most likely will respond to these, not trend lines. These are just ideas of, essentially you have the market flow like as best as we can get it, and this is basically the most macro. This is the most macro. It's not a trend, but it's essentially a trend. It's the best thing we have, and as a trader, everybody's going to be trading off this. And so, like I said, don't trade it like a breakout pattern. But if we do break this pattern, if we do break this right here, or whatever you want to call it, it's not a pattern. But if this area does break, this is going to be massively bullish. because essentially this is trending down, even though it's not a valid touch point trend line or whatever. And even though this isn't a valid trend line, so I wouldn't recommend trading this triangle right here. Let me see if I can line that up just a smidge better. So I wouldn't recommend trading this triangle right here and say that this is the breakout, because touch points are terrible. And I wouldn't recommend trading this one way or the other. But it's just something to give us an idea on the markets. And it's very important that we realize that these aren't valid, and that we're not Carl the Moon's Telegram group. They troll each other, so they're just asking for it. And they just draw random consolidation patterns that don't have any TA behind them. You can't just, like I say all the time, you can't just put lines on the chart where you think they go and it's a consolidation pattern. It doesn't work like that. Seriously, I see that way too much on their channel or on their Telegram. All right. I literally look at them for entertainment sometimes, but sometimes it's like just it's not cool, because like a lot of those guys, like they'll troll like the new guys, and it's just mean. They're like, oh, Bitcoin's going to whatever, and it's obvious that that's not the case, but the new guys freak out. Kind of mean. So what else are we going to look at? So let's take another look at ETH and see if we had that fractal play out. It's a little early, but jeez. So this is a long signal on the 1 hour. Guys, remember, this isn't price action. This is a percentage of the market cap delegated to Ethereum dominance. So just, you know, like see this long signal right here, and then see all this downwards price action. You know what I'm saying? So let me make sure that my head's not in the way of these different symbols. Okay, good. It's still down here. All right, so that's ETH.D. I wanted to take a look at at Cardano. You guys know that's my favorite crypto. I literally like I just wish I could accumulate more. So I think it. How did it not? You see this trend, or you see this fib level right here, and it doesn't look like it touched it at all. I thought I remember seeing it touch it and bounce off of it, but I guess it didn't. Let's see. Zoom out on ADA. So I left that up, and I really do like this. I do think that this is really the major area where you would do a swing low to swing high to pull out a Fibonacci retracement, and then it looks like we hit that area perfectly right there, which we talked about. So good job, community. We are literally killing it. All right, what else we got? And actually, you know, we could pull that back up to get another target because it is valid. Yeah, let's do that. So I'll give kind of like more so the macro charts. This is on the 1 hour. Okay, let me draw. Oh, wait 1 second. So you guys know that we do Elliott wave. Look how beautiful our charts looked. We had like a consolidation pattern that literally broke out just so insane. Like literally like, oh, right here. Look at this consolidation pattern that we've called right here. This was just so insane. Imagine you traded that on leverage. Life-changing money, baby. Welcome to the channel. Let's see. Yeah, I would still call that right there. But I'm trying to figure out where exact the pump is starting, really. And it looks like, yeah, when you zoom out, it looks like parabolically it's right there. And I'm actually going to chart it with a parabolic curve later. So That should be really exciting. I'm not even joking. I'm just really tired. I freaking blew out my back today. Let me see. What do we got? Let's put a horizontal line right here. I blew out my back. I'm a Marine, and I was freaking running up this mountain with a duffel sack thing. I had a 45-pound backpack, and I'd already been going hard in the gym yesterday. Straight up blew my freaking back out on the trail. So I was supposed to be sleeping right now, but I'm like, to recover my back, but I'm like, my community is being so freaking good. Like, even though we have a small community, this is definitely the best underrated channel on the entire cryptoverse. Like, yeah, people might be sleeping on Ethereum, but they're also definitely sleeping on this channel. Alright, boom, right there. And so anyways, I was like, I'm just treading water tomorrow, because that's what Marines do. So I'm like, I don't need sleep. My back will be fine. I'm just treading water tomorrow. Alright. So I drew this right here so that when I zoom out and I draw the fib extension, I know where to plot my other fib level. Alright, so we're going to go to this fib level right here. I might get some pre-workout right now so I can stay up, because I don't think I have any other caffeine. Alright, Fibonacci retracement. Let's see, so right here, I'll adjust it when we go up. Then right here. Yeah, we're going to adjust it. But this is going to give us our extended. This is probably going to be one of the best price targets for Cardano. And it's not like one of those stupid, I literally hate clickbait titles. That's why in a lot of my titles I always say not clickbait, and I mean it. Because like, it's just stupid. It's like almost like you're stealing time from people. It's so messed up. I don't like to say that I'm a YouTuber, because first off, I have like no subscribers. But then second off, they always do like the crappiest thing. Like, being a YouTuber in finance pretty much means that you're like ripping people off. Like trying to sell them some crappy course, giving them some crappy information on some crappy video, and then wasting everybody's time. And then that's what really inspired me to be on YouTube, is because most of the guys on YouTube are freaking awful. Like, just freaking awful. And they're so annoying. They're so annoying. They always say, like, it's like a 10-minute video about nothing. And here we're actually perfectly charting an actual price target on Cardano. Like, we literally accurately called the top on Ethereum. We literally accurately called the bottom on Ethereum. We literally accurately traded 10K. Like, I could have put any of that in the title, and it wouldn't have even been clickbait, but yeah, I just hate YouTubers so much. Now, a lot of the YouTubers in crypto are actually pretty cool. Like, I like Big Boy a lot. I feel like he got a lot of hate. All right, so we're looking at like $1.36, almost $1.37. That's going to be the most relevant by far. Fibonacci extension, which is really one of the major things that we have to be looking at when we're talking about Cardano. We can be looking at other things like Fibonacci circles. We can be looking at, you guys know, like Fibonacci arcs, all those things. Yes, but like I say, and it's not just we cover everything and then everything also that you need to know, which is everything. And so if I was to cover those things, those are more advanced, and as you see from all these other channels, they either don't know how to do those, which is most of the case, is they don't know how to do those and they don't accurately chart them. And because they're more advanced, most traders don't use them. And if most traders don't use them, then the price action is significantly less likely to respond as extremely accurate as this major fib level, which is a Fibonacci extension, is up the sleeve of most investors or traders or whatever you want to call them. So that's really what we're looking for right now. And then really we want to break this all-time high, obviously. And really the other thing, besides the fact that this is such an easy and accurate and substantial level, the other thing is because this level right here was extremely accurate, almost calling it to the exact T, this Fibonacci extension area, because this is the Fibonacci right here, and then this is the extension right here. So not only was this Fibonacci extension like extremely accurate to begin with, and then also on top of it, the ease of use and then the calculated position. So we're just going to draw this right here, this right here, and then like once it hits all-time high, so essentially we're looking for this level right here, and then you're like, well, what happens if it retraces? Good question. So that is our projected target for the top after we break this all-time high. Is this Fibonacci retracement? Okay. So I mean, there's a lot of ways to go about it. I'm going to take this right here all the way down to that level we drew right here. And then I'm going to color it in a little bit. Boom shakalaka. Alright, and it looks like we got a nice bounce off of this golden pocket and we're heading higher. Very bullish. Very nice, very nice. And that's really the technical analysis that you can do right off the top of your head off of this Fibonacci retracement or UI, whatever. I took advanced English classes. I know that you don't refer to people in you when you're not talking about them specifically, but you know what I mean. Let's see. I'm just tired. Let's go to Uniswap. I love Uni. Uni was pumping, and we still haven't broken all-time highs yet. What the heck, Uni? Okay, so there's a lot going on here, so we got a lot to cover. First off, there's some things that I see right off the top of my head, and so that you see them too, I'm going to draw them. Let's go to the 4-hour. Gorgeous. Paintbrush. Oh crap. Can't move it when I have the paintbrush open. Okay, there we go. I saw a head and shoulder, or an inverse head and shoulders, but then when I pulled it up on the 4-hour, I didn't really see it. Let's see. Yeah, I saw something like maybe like this is a shoulder, this is the head, but then this head is not below this shoulder, so this would not work. The head would have to be lower. So that was one thing that I saw, but that's a no. Then let's see what else. So like I think a lot of people are screaming, it's a W pattern, it's a W pattern, but you know, for double bottoms, the price action has to come in from the top. So it actually does come in right here, and we actually drew it really nicely when we were charting it before. And what we were looking for was a nice W pattern, touch the neckline, and then bounce higher, I believe, with some corresponding levels back there. But At this point, it looks like this is a double bottom, yes. So we can draw that. It's on the 1 hour. The spread's a little high, but it still is technically there. So you got that right there. Oh, there it is. It's looking for you. There you go. And then we'll move this right here as the neckline. Neckline's always the candle body, not the wick. But you guys know me. I like to do, because then it signifies, you know, the break of the higher high, which is significant for uptrends and stuff. So then we'll put this as the more significant textbook, even though they're both textbook, they're just different. So yeah, we got a nice little double bottom idea right here. And we're gonna get the measured move for it. This is on uni, the 1 hour. Go from neckline to candle body. You can do wick for a measured move, but oh my gosh, look how perfectly that hits. That right there, and then but that would be on wick. This would be candle body, so that looks really good. And then really what we're looking at here, this is absolutely massive. Guys, this is absolutely massive. So really there's two factors, but this is like massive right here. And I'm not even joking. It sounds like I'm joking. If we hit this level right here, and then we come up here and we set a local top, and then we come back down, that would be a rejection. And if we get a sharp rejection, this would be a double top? Potentially. Not really. But this is most likely the idea. It's going to get negated because alts seem to be pumping pretty good from what I've seen. And it looks like alt season is nearly starting over again, whereas the large caps are seeming to pump quite a lot. So this is in 1 hour. So basically all day today, Uniswap has been pumping. And it reverted out of this cool off from its double potential top, but it didn't break the neckline. And then so this is a high. Is this seriously? Wow, it's a little, it like nearly invalidated the trend, but we do have a trend going this way. So yeah, it's just, you know, this is really what we're looking at, is like a trade potentially with alt season perpetuating that. Let's take a look at our favorite link. We've called like the tops and bottoms and whatever on links so many times just because of this trend line that we're always talking about. Look how gorgeous that is. I didn't even have the chart pulled up and we already called it. Jeez. Yeah, you guys like that. You guys like that stuff. I don't know how many times we've called link. And link's such an important, because it's Oracle, which runs, you know, Ethereum and, you know, all these different, it's massive. It's the pipeline. You got to have these in blockchain. People don't realize how massive link is. Like if you don't have link, then literally the different protocols and tokens and everything can just lie to each other, but link is like the fact checker that doesn't let everybody just get messed around with. It powers Uniswap, it powers Ethereum, it powers all sorts of stuff. So link's massive times, and it looks like we just called it again. And we really want to break this line right here. So before it was this line right here, and we hit it. Then we finally broke above it, and we get this massive pump because we broke above it. And then we get this massive pump because we broke above it. We come back down. We don't find support on it. We dump. This would be a good opportunity right here. And then we finally break above it. And anyways, so we're going to get obviously a pump if we break above this line right here. Currently, the line sits about 33.47 cents. So $33.47. Approximately, and then obviously consider that as time goes on, it's going to go up higher, this trend line, if it doesn't break it. But with you have I was gonna see if this was a double top, but with the massive alt season impending, it's kind of the same thing with Uniswap. Is that this line just might be forced up because alts are gonna be doing so well. At that case, though, the only thing you really have to think about is, okay, we had this massive pump up right here. Why did we have this dump right here? Like, if it's really that bullish, then why do we dump right here? Then why did we come back up here and then dump again? And we kind of see the same thing with Uni. And it could possibly definitely be like larger cap coins. Let's see, .d. How are you? Oh, that's why. Let's see. Yeah, so I mean, that's really it. Is, with larger cap, it just seems like they fell off. All right, let's see. But it looks like they're coming back. But how sustained is that? Like, once you get the larger pumps, then they go into the mid caps, and then they go into the small caps. So, and small caps seem to be pumping too. So, before, when we first started getting into alt season, it was like, oh, only large caps, and then it looks like we're starting to get some smaller caps pumping. All right. So how sustainable is the larger cap pumps? You know what I'm saying? We'll see. But it seems like everything's pumping right now, and there's a lot of money coming in to back everything up. But like I said, I already showed you guys. I guess I'll show you guys again. Because my community is freaking... I like my community a lot. Alright, so this is the line you want to look at right here. There's a lot of numbers that you're looking at. You just really want to look at this. This is the last 24 hours. And it looks like everything's pumping, like the large caps, like what we were just talking about, yes. And then essentially what you want to do, and this is like kind of what everybody says, but they don't really show you how to do this. This is why I'm doing it. You scroll through and you're like, okay, oh my gosh, everything is just pumping. But what you do is you want to figure out which market caps are pumping the most. And it looks like the large caps, relatively speaking, like you have the outliers, but it looks like relatively speaking, the large caps are pumping the most, it looks like. And then you just have the outliers that are making their way up the charts. Because usually the price action goes from Bitcoin to large caps, really to Litecoin and you guys know I don't like Litecoin, but it would be ridiculous to argue that Litecoin isn't extremely have a good history. But would I touch Litecoin? No. There's no need for digital silver. And if digital silver is anything, it's ETH. And it's kind of like the same thing as ETH, with silver, like gold, there's not too much use case for. Silver, it's made in a lot of, and I get it, like, I have gold and I've invested in gold, like they use them in computers, I get that, but silver has a more industrial use, whereas the same thing with Ethereum, it has a more industrial use, like it's used more so than as a store of value. But they're also saying ETH is like a store of value. So I think more so than anything, I think Bitcoin's like digital gold, ETH's like silver, because there's more supply of silver, yes, than gold. And gold is supposed to be hard capped because it's created through a supernova, which you can look up. That's why it's used as anti-inflationary asset, and right now it costs more to mine gold than it's actually worth in a lot of cases. So similar to those anti-inflationary aspects too. There's pros and cons to every asset class, but so really you just look through these coins right here. And then you're like, okay, well, it doesn't look like we're at the low cap gems right now. Are the low cap gems pumping right now? It doesn't look like they are, because right here you have a massive amount of risk that you're associating. So really, if these are pumping, you should see like 50, 100%, 30% gains off of these coins, which you're just not seeing even close to that. You know what I'm saying? So it doesn't look like the market showed up here yet. Yeah. I mean, there's no really other way to say it. That's what you want to do is you want to go through. So this is CoinGecko, and what you want to do is you want to go through CoinGecko and be like, okay, well, which market caps are pumping? It really doesn't look like this market caps are pumping with the outliers. You always got to, discard the outliers, just like, when you're studying statistics. It's the same thing. The outliers, you throw those out, and then you look at and it looks like we haven't got to the micro caps. It looks like pretty much everything in the market's pumping, and the micro caps are next. Micro caps, everybody has a different definition for small cap, micro cap, whatever. 500 on like 500, like 4 something to like 500. You guys saw the charts. Those are probably going to pump next. Not like next as in tomorrow, but those are probably going to be the as just look at CoinGecko. Once it starts to trickle down, once the pumps start to trickle down, you'll see. And we'll constantly go over it, and we have been going over it, and we call when the large are pumping, we call when the smalls are pumping, we call all that stuff. And so you wonder, why is Bitcoin not pumping? It is a lot of it has to do with the fact that you have this massive, oh my gosh, look how perfect that is. That is just so freaking solid. It is ridiculous. Guys, I don't like saying that we're the most underrated channel in crypto, but look how dirty that is. Just look at it for a second. Please. Please. Guys, nobody will tell you this stuff. They just don't have, I don't want to say they don't have the education, because that just sounds mean, but guys. Alright, so this is obviously a touch point right here. I want to extend this out so we can get an idea of these fib extensions, but I also want to keep the touch points valid, because I didn't just randomly draw this. This is a very valid technical analysis Fibonacci retracement channel. And I don't ask you guys to hit the like button, which I think is really cool, because that freaking annoys me when YouTubers are like, hit the like button, especially like before the video even starts. It's like, how do I even know if I'm gonna like it? I mean, I always hit the like button on everybody's video, because like I believe in karma, but I just, you know what I'm saying. Stuff can get annoying. Alright, let's see. So this one, and then we just need to bring this up a little bit. Alright. And there are a massive amount of touch points on here. So it looks like you got that one right there. And this is really the base right here. And then looks like we got to move it up a little bit. Yeah, and then look how perfect that is right there. We just have to move it up a smidge. And then I remember it wasn't hitting these areas, and I was sad about it, but Yeah, it looks really good. No way. No way. I think it's just a little off, but it looks like it definitely hit this moving average right here. But like, guys, this thing looks so good. And I mean, look at the wicks close. Like, it just, I don't know, guys. Maybe it's a coincidence. Maybe it's Maybelline. But you guys know, if you've been following the channel, that this thing can be scary good. Alright, so that's Bybit, that's Bitcoin, USD, comparative. And really what I want to do, because I think a lot of people are really concerned about Bitcoin, like what's it going to do? You guys know we don't sell coins on this channel. Everybody is always telling me that it's the top. And it's like, you guys didn't call the bottom. We called the bottom on this channel. It's so easy. I always say it's so easy to long Bitcoin in a bull market. And heck yeah, we've been longing the crap out of Bitcoin. But it is very difficult. And where most people are going to lose their money is transitioning from a bull market to a bear market. That is perfect right there. That is so perfect. Okay, so we're going to use that measurement. And I'll talk about it in a second. And then there's this whole thing about how it might end this cycle. And hey, I'm not saying one way or the other. I'll talk about it in a second. But the point on this channel is we got the best strategy on the internet. No cap. No clickbait. Trust me, I'm never going to clickbait you. Because I'm not a hypocrite. I literally hate that stuff so much. But I will show you guys the best strategy for taking profits in Bitcoin. And like, you can literally watch the video. I didn't post a lot back in the day, especially when I was trading it, but I was fortunate enough to make a video where I did talk about when Bitcoin was at like 14K, like Bitcoin going potentially after breaking 16K, that was breaking the bull market doors and guaranteeing that Bitcoin was going to go on a bull run. And I mean, I was buying heavy. I have other videos on social media telling people to put their life savings in at 11K. So like, we absolutely nailed the bottom. Like, really, I mean, risk to reward ratio wise. Because I mean, people will say, well, why didn't you get in at 100? There wasn't the fundamentals back then. Yes, no. All right, so this 15,000 or 55,746, that is an incredible Fibonacci level. Let me just move it down a little bit. Let me make this smaller so we can get a precision. You know what I mean? Because it's like, I mean, like, yeah, we could have bought in at 100, and I did buy in 100, but I also sold very soon after I bought Bitcoin at 100. Like, who knows with something like that? Risk to reward ratio. That's all Bitcoin ever is, and all Bitcoin ever will be is risk to reward ratio. And when you're selling Bitcoin, you're not actually, I mean, you are selling it, but really what you're doing is you're moving one asset into another asset. So you're taking your cryptocurrency asset and you're exchanging it for United States dollars, which are, or USD if you're in the States, I mean, or the euros or whatever. But let's take a look at DXY really quick. So I just gave you guys the Fibonacci retracement, or the Fibonacci extension level. That's going to be absolutely massive. After, you know, we're looking at, there's targets at like 53, 54. We'll see where those go. But as far as Fibonacci extension levels go, 55, 6, 8, 8. So on this channel, we've given you nothing but the facts. Tops, bottoms, we've called everything. That's the hard part. I mean, everybody's a winner in a bull market. Oh, you get some money. Oh, you get some money. But most people give it back to the market because they don't understand the macro economics of the asset or the economy. And that's the real skill. And like I said, I have a very good take profit strategy. So even if, you know, there's a lot of talk in the space that this cycle might not end, and I think that is extremely toxic. for a multitude of reasons to say that, oh, this time is different and the cycle is never going to end. Do I believe that? Yes, I do believe that. I believe that with my emotions, that I don't think that this cycle is going to end. Oh, but this time's different. Institutions are coming in, and guys, I want to believe that, and I do believe that with my emotions. But we can't think about emotions, because if you think about emotions, you're going to get wrecked. You never ever trade based off of emotions. What you do is you trade off of the facts, and the facts is that there's a stock to flow ratio. The fact is that this is, a market, and these markets have moving averages, and the more extended we get on a moving average, the more likely we are to retrace back to that moving average. We have RSI, Relative Strength Index, and the more overextended we get on RSI, the more likely we are for a major correction. And so I would like to say that this cycle is going to be different, and Bitcoin's just going to go to $1 million this cycle, and a bunch of people, a bunch of companies, a bunch of whatever is just going to dump all their money into Bitcoin. Now, if that does happen, which I don't think is going to happen based off of logic, not based off of emotions, based off of emotions, I definitely think that's going to happen because it makes sense. At this point, there's no really excuses for crypto. It's not that everybody knows it's not going anywhere. Everybody knows. It's just like the fact that it made it this high up. There's always going to be people, even if it just crashes, there's always going to be a community of people putting their money into it because they're like, well, if it went up this high before, it's going to go up high again or whatever. So there's a lot of reasons why, like, speculatively talking and emotionally talking, we say, oh, this cycle is going to be different and there's not going to be a bear market. And, like I said, I believe that emotionally. So if there's anybody out there that's like, I believe this, like, I believe this too, but it's all emotional. As far as the charts go, the historical data, the cycles of cryptocurrency, the factors of cryptocurrency, like the fear and greed index, basically any chart you look at, and we can look at some charts later. There's a lot of charts that we could go over. Like I said before, just, a lot of these charts are based off of the relative strength index. A lot of these charts are based off of the EMA, exponential weighted moving average 20 weekly. A lot of these different charts, like you see the rainbow log chart, you see all these different charts that you see in crypto. They're all based off of fundamentals, like these different indicators, and then the scale version of them, like in logarithmic linear fashion. Yes, but so the reason that it's not most likely going to hit this cycle and why it's extremely toxic to say that is because if you don't pull out and you keep all your money in, and then the cycle, ends up coming into fruition and we hit 200,000, we hit 500,000 and then crash, you're gonna lose all your life-changing money. But I actually, believe it or not, I mean, I'm pretty sure you do believe it because this channel is just on some other stuff. I actually have a strategy to where it doesn't matter. This is crazy. Check this out. I actually have a strategy to where it doesn't matter whether we hit $1 million this cycle or whether we hit 100,000 this cycle. My strategy does not change. So let me break it down. I've already gone over it before, but essentially, it's a very good strategy. I'm just tired. So essentially, it's like take 3% out at 74,000. Why would you take 3% out at 74,000? Now, this is not financial advice. This is my personal plan, and I've been involved in this space for a very long time. And I can tell you as an absolute fact that nobody knows when the market top is. And I can tell you as an absolute fact through trading multiple different asset classes and having I just have a really good financial track record. And a lot of people that have been following me on social media platforms like Snapchat know that, with real estate, with stocks, with everything, I've had an insane track record. And a lot of that comes to cost-based averaging. And cost-based averaging in crypto means time, and that is not what I mean at all. I don't think time is going to be the answer to the markets. I think it is definitely going to be USD value. And so why would I pull 3% out at 74K approximately? And it's because a lot of people are thinking that the top's going to be 100,000. There is a massive amount of people that think that the top is going to be 100,000. Not only do a massive amount of people think the top is going to be 100,000, but it's also what we call in technical analysis a massive, massive psychological barrier. And if you don't think that psychological barriers are extremely important, I mean, they are. There's so many different textbooks on technical analysis written about them. A lot of YouTubers talk about it, but yes, psychological barriers are massively important, and 100,000 is probably the most important psychological barrier that we've experienced in crypto since 1,000, 100, 10,000. 100,000 is going to be the most massive psychological barrier. So if everybody is thinking that 100,000 because of either the psychological barrier or just because it's a nice round number. There's a lot of different reasons, and that's why they are psychological barriers. If everybody's thinking 100K is the top, then if you take a small percentage out at 74, why 74? Because there's also people that are as smart as me that are like, well, if everybody's thinking the top is 100, I'm just going to take a little bit out at like 80 so that I guarantee, make decent gains. And so if there's people out there that are taking it out at 80, so then basically 70 is the perfect risk to reward ratio. And you see this on a lot of logarithmic scales. Like for example, you have the heat maps that you have on the EMA ribbons where it goes from blue all the way to yellow and red. And on these logarithmic scales, essentially on every single scale, like on the Bitcoin rainbow chart, let me pull it up real quick. But essentially right now is not the time to be accumulating. Why? Is Bitcoin still going to go up? Yes, Bitcoin is still going to go up. It's obviously going to go up. Like we're just halfway through this cycle at the least. But but when you're looking at acquiring an asset, you have to factor in risk to reward ratio. So even though we're going to go up, it's not the time to be accumulating. Right now is definitely, according to every single technical analyst, any technical indicator that we can use. And I'm going to show you the rainbow chart. Bitcoin rainbow. There's a lot of charts, and again, these are backed up by technical analyst, like technical indicators. All right, this is a really cool chart. So right now we're in, is this a bubble? Right next to HODL. So this is HODL, this is right next to a bubble. And then FOMO is 65 right here. FOMO intensifies. Sell seriously is at 92. And then, but it's a logarithmic scale. And so this obviously factors in things like RSI and different things. So the longer that we go out this way, the higher these prices will go out. You see what I'm saying? So, this is just if we were to go up today. Like if we were to go up today, the top would be 117. If we were to just blast off, which isn't possible when you look at finances, unless the derivatives market was to come in, which isn't possible either. Is that possible for the derivatives? Because then they would have to trade against each other, take profits, and I don't think that's possible. But like I always talk about, Bitcoin, the market cap on it, even if Bill Gates was in it, he doesn't even have the liquid funds. People say, oh, Bill Gates is worth, 100 billion. He's not really worth 100 billion. He's worth significantly less in USD. The liquid capital that he has available. I mean, off the books, the guy's like, we're not even going to get into that, but if you look at that, he can't move around that money that quickly. So it's not really possible unless somebody like Amazon, Google, and Apple And really what it looks like is it looks like Amazon and Facebook are going to be more likely to get involved in this space than Apple. I know Apple seems interested, um, and then Google could possibly do it. Google's really big on innovation. You know, they're always on the biggest things. They're always on AI. They're always on self-driving cars. So I mean, when you look at Google as like company and what their core values are as far as like technology innovation, it makes sense that they would put something like Bitcoin on their balance sheet. But anyways, even you would have to have something like that, and even if that is the case, they usually buy it over the counter, and there would more likely be a supply shock, and the supply shock would drive us up to like a current evaluation of something like, you know, this possibly, if that makes sense. So essentially what I'm looking at right here is basically cost-based averaging out a position and basically putting out 10% of my position below 100,000. Why? Because I mean anything could happen, and 10% of a portfolio is not a lot in my opinion, especially for my portfolio sizes. You know, for other people, if you only have $100 in Bitcoin, 10% might be a lot, and you might really need to nail the bottom on this one. Or, you know, just depending, you might just want to hold for the next cycle, but probably better to like snipe, you know, something like, you know, but so 10% like in most like decent portfolios, it's such a small amount. And you know, like I said, 100,000 is going to be a massive psychological barrier. Do I think that, you know, Bitcoin's going to go higher than 100,000? I think it's at least going to hit 100,000, which is what I've been saying since 10K. And that's on spot with pretty much everybody. But you know, if that's the case, if it let's say if it doesn't hit 100K, then I have no problem holding. Like I have no problem holding my position because that bear market's going to be extremely short. And then my plan is to sell another 10% up from 100K to 200K. So let me see if I can draw this in. Let me see if there's any questions in the chat. But anyways, this is really good. There's a lot of questions. All right, I'm gonna answer all these questions. Yo, man, what's up, bro? I own Bitcoin, Litecoin, and Ethereum, and I'm happy. And ADA. Well, ADA is your best. ADA is your fourth favorite, bro. You know, ADA is compatible with ETH. ADA can literally just steal ETH's entire market, and it has what are they building? They used is it Java? I think they use JavaScript, so it opens up the ability for all different it opens up the ability for all different programmers, on top of the fact they can just steal ETH's market cap, and they have scalability that's way better, and they're more decentralized. I would recommend that you look more into Cardano. Just letting you know, this is a Cardano channel, and that's by far the best crypto. Hello. What are we looking at here? And I like it. YouTube karma. Yes, sir. So we're going up or down then. So right now we're consolidating, and a lot of that has to do with the fact that we're in alt season. Although when you do look at total, which is the ticker symbol for the total crypto market cap, factoring in crypto like the alts, and you want to look at total, not total 2. When you look at total, which is Bitcoin and the altcoins, so the entire crypto market cap, you see that it's going up, so it has the potential to bring in that money. But that's really what you want to look at is BTC.D, or you want to look at, yeah, I guess that would be Bitcoin. Yeah, I mean, really, we have the potential to move Bitcoin up, but it's just not looking good. It looks like there's divergences. What is the point? Tell me what to do. I need strategies, my guy. 50K was a physical barrier. It broke 50K, maybe psychological. But What's the strategy? What are you looking for? I mean, I'm with strategies all day, my guy. Just tell me what you're looking for. I mean, we just traded 10K in ETH. I just yield farmed. What is that? What did I yield farm? Frontier. And we're making stupid bands off that. And I mean, I'm staking Cardano, and that's up 10% since I bought in heavy. And then we've traded every single profitable swing trade that you can trade in the markets. So, I mean, on the channel, like, we're on it. Just let me know what you're looking for. Like, what are you trying to do? Are you trying to, I don't know what you're trying to do, but I could help you if you tell me what you're trying to do. And if you go to this channel, like, we just tell you the moves. And right now, the move is we have a trade open. I always like the thing is, like, people always come to me and it's like, if you're missing the opportunities, we always give you the most massive opportunities. I always tell you the perfect coins to buy. We always call the bottoms, the tops, whatever. If you're missing opportunities, I don't even want to show my own channel, but literally the best advice I can give to you is subscribe to the channel, and you're going to get massive opportunities all the time. So anyways, we've been working on this. I'm just been taking profits on this Ethereum position. And the reason I've been taking so many profits, not because I want to, but because um, I don't want the funding rate or whatever to mess with me. Like, because the funding rate's so high. So we took like 7K in profits or whatever, or 8K. I don't even remember. But so that's our move right now, and we've been absolutely murking it. XLM, I like XLM. Got any TA for me on those? Bro, we've been doing TA the whole channel. You must just be new to the stream. I was talking about my killer freaking strategy for cost-based averaging out because we called the bottom on Bitcoin originally, and then I was about to call the top on Bitcoin. Like, obviously, that's important. But anyways, there's this massive double top on DXY, something to be looking out for. Of course, we're going to keep you updated on the channel. So if this breaks this line, that could be absolutely massive, catastrophic for the dollar. Let's see. Let's look at Bitcoin. I mean, really, like I said, like, if you're not informed, like, it's really just, you're not looking at the channel. So I mean, we did earlier, but take another quick look at what we're looking at on all these charts. So as far as it goes, we have targets everywhere. Like, we have targets at 53, 54, and then this is a Fibonacci extension level right here. So you have this right here, you have this right here, and it hit this level perfectly, and then essentially the next Fibonacci extension level that we're looking for is 55,688 is the fib target level. I don't know exactly what you're looking for, but that's our target, potentially. Possible bearish, bullish divergence, possibly bearish divergence on the RSI. Let's see. Okay, so that is Bybit. But yeah, I mean, really, you just missed the charts earlier. Obviously, I cover the charts. And then we're looking at this consolidation pattern in this area right here. Has massive amount of touch points. So tired. Starts right here, and then just massive. 1, 2, 3. At least 4, 5, 6. 6 touch points on the daily. Hit that sub button. I don't even want to show this thing, but hit the freaking sub button, puppy dog. Don't play. And then obviously there's massive touch points on this uptrend. So essentially we're in this consolidation pattern right here. Like I said, I don't even really know exactly what to call this. Maybe an ascending wedge. But This is what we're looking at right now, and if we break through this level right here, which is around 51, 51.8, let's see if I can get a better, like 51.7, you know, that bearish divergence could be playing out, so keep an eye on that. I think that's good. I want to talk about the rainbow chart. I mean, if anybody else has any other questions, but yes, sir, I'm sorry. Nah, you're good. You're good. I just like it would be dumb if I didn't cover the TA, but trust me, I covered it earlier, and then that should get you pretty much briefed on it. And really the move, in my opinion, is, and we covered it earlier, but I'll just pull it up really quickly because this is absolutely monumental. Because like on BitBoy's channel, they're like, why is, and I love BitBoy. I really, really do love BitBoy, and I talk a lot of good stuff about BitBoy. But BitBoy's like, why is ETH not moving well? And there's a ginormous double top on the ETH to Bitcoin comparative chart, and it looks like we're hitting this measured move right here. And the reason Ethereum has been doing relatively well in the past few hours is because potentially we're wicking this currently, finding resistance, and then flipping it support, potentially a flipped resistance, flip support idea on a double top on the ETH to Bitcoin comparative. We're going to continue looking at this, and of course the measured move is right here with support from this previous price action right here. So potentially either we're wicking right here or wicking right here, and then that could be an amazing opportunity for Ethereum. So we're giving you guys the opportunities. We're just looking into them. We're already in long positions already. So like it's like you know, and I didn't even want to really enter into a long position on ETH. I'd rather buy it, but I already spent so much money on ETH, and I literally drained my bank account, and so I didn't have any money, so I had to put up my collateral on ETH to leverage out more. And we just closed 8K off the table. And then like the main concern that we had in this channel was not necessarily that our trade wasn't doing good, because on extremely low leverage we're up like 8, 9, 10% on extremely low leverage. The problem was the funding rate, so we're just looking at going price by price on that. All right, back to the rainbow chart. I love this thing. I love rainbows, like just all the colorful stuff, like, and I try and make my charts colorful and entertaining. So anyways, 10% out before 100,000, so like, you know, 3.3% out, like 74, 8.6, 3% out, and then 94K like right before 100, like 3.3, so about 10% out before 100. And then right as we're going from 100 to 200, like 110, 120, 140, 160, right before we hit those are all massive psychological barriers. Just take 2% out, 2% out, 2% out. And so then if we hit a 200K, which is a lot of people's targets, and we hit 200K, then you already have 20% of your position out. If we only hit 100K, and then if you have, like, most likely what's going to happen is you have that massive psychological barrier, and yeah, it's mostly just a psychological barrier, but it's absolutely massive. Do not underestimate this psychological barrier at 100K. It's most likely going to hit like 100K, and it's either going to breeze through it or it's going to hit it and then crash down. And I think it's going to hit it and crash down, because like when you look at its cycles, when you look at the history, it's like as important as when Bitcoin hit $1, $10, $1,000, 10,000, 100. It's absolutely massive. So anyways, just having 10% out of your portfolio before 100K is just going to be a breather. But like I said, you know, even looking at all these different charts right now is not necessarily, right now is the time to hodl. I mean, it says right here's the time to hodl, but it's still the time to hodl right here where it says, is this a bubble? Because right after, and FOMO intensifies, and the risk to reward ratio is still good for holding. And so yeah, and then so my point is this: you take 10% out at 100K. Before 100K, you're gonna be chilling if Bitcoin corrects 30%. And this is the crazy part: if you're super bullish and let's say we have a 30% correction at 100K, and we go from 100K and you start pulling out before 100K, and then when you correct back down to 70, you could actually put your money back in and make a little bit of money if you wanted to. If you wanted to take that potential risk, and the risk to reward ratio would be better on that because you're already making profits on that. So just saying, there's a lot of benefits to it. And then 200, 20% out to 200K. And then essentially my strategy is to take 8.8% out every 100,000. So like, like maybe 2% out at, let me draw it out. Let me get the whiteboard open so you guys can really see what I'm looking at. Whiteboard. I'm going to draw it all out. But this strategy that I'm using, it literally doesn't matter. It literally doesn't matter if the cycle ends or not. This strategy cost-based averages out to $1 million. And you're saying, well, Hustle Investor Pete, you think you have the best strategy in the game. And I do. I do have the best strategy in the game. We did call the bottom on Bitcoin, and nobody can call the top on Bitcoin, but we're going to cost-based average out perfectly, because at the end of the day, even if you don't cost space average out your entire position at the top, like that's not necessarily what you want to do to begin with, because 40,000, 50,000 is most likely going to be the bottom of the next cycle, if there is a cycle. If there's not a cycle, then we get scale out perfectly. And if there is a cycle, so there's no way of losing. And there's nobody on the entire internet that's going to teach you this strategy that I'm about to teach you. And the key fundamental reason why this is literally the best strategy on the entire internet, not financial advice, is because nobody knows the top. Nobody can tell you the top. So, and that's not like anything other than because nobody can call the top. It's not that, because nobody knows I'm the best. It's like, it's because nobody knows the top, and therefore the best strategy obviously is cost-based averaging out. All right. And then this is obviously the best cost-based average out. Is this, I don't know. I'm looking for a whiteboard. Whiteboard. Here we go. There we go. Yeah, I'm a teacher. I'm teaching crypto. Ask me questions while I'm doing this, though, because I do want to help you guys out. And I know I don't really go over yield farming, and it's just because you need a massive amount of money to negate those fees. Jeez, why can I not get a free whiteboard? Let me just go into notes. That would probably be better. Notes. Yeah. All right, that's perfect. Okay, so this is my exact strategy. And we're going to factor this in with technical analysis. I love the rainbow chart. Yeah, I love the rainbow chart too. Brand new day today. Yes, sir. Thanks. I'll rewind my bad. Yeah. Let's see. Ask me questions if you have any questions. Where are my notes at? Are these the notes? Okay, cool. All right, continue. All right, so this is the best strategy. What is this? Oh, I think this was back when I was in, I used to be in stocks, and we absolutely murked stocks. And I think that was like, I don't know exactly, but those were stocks that I was buying. We made 400% ROI on stocks on that dip. All right. So I'm just going to be drawing these really quickly, and then I'm going to be talking about all of it. So really, these are just ideas. Really what we're going to be doing, and on this channel, we're not going to just be like mindlessly pulling out at these levels. We're going to be looking at patterns, but these are like the approximations of, maybe the breakout target is 50 or 87 instead of 86, but these are approximations, but this is the idea you want to look at, something along these lines. I'm giving you the textbook play that we're literally going to do on this strategy to perfectly cost-based average out, because really, what are you doing when you're selling your Bitcoin? That's the question. And I have some incredible videos that are coming out that are literally going to blow your mind. I get that we might be the most underrated channel on crypto, but we're, a lot of you guys know that I was heavy in real estate, super successful in real estate. Literally, my entire college fund went into, what was it, like 500% ROI real estate property investment. So, yeah, we kind of are retiring this year. But, let's see. But so yeah, this channel is gonna be the content that I'm about to put out. I'm not even chilling. I'm not even clickbaiting when I tell you you're gonna need to subscribe if you care about finances at all, because these videos that I'm gonna be putting out are going to be mind shattering. Literally, I'm not even capping. But like, who's gonna show you this? Like, I see the stupidest videos all the time when I click on my strategy for my exit strategy for crypto. It's literally the time. And then some people are too afraid to share an exit strategy because they don't want to be wrong. And then a lot of people just have price predictions. But obviously, if you put all your money into their exact price prediction, it's obviously not going to hit their exact price prediction. And then when it doesn't hit their exact price prediction, then it's either going to go under and you're going to miss the top, or it's going to go over and you're going to sell too early, obviously. So it doesn't make any sense. Like, price predictions are good, and if you really believe in a YouTuber, you can put your bank on their price prediction and spread out like approximately, like put a little bit below and a little bit under what their percentage is. But this way, this is how I see this. Let's just take a look at what we have right here on the charts. Let's take a look at this for a second. Like I said, you're already 10% scaled out. If there's a 10% or if there's a 30% correction after 100K, I literally wouldn't sweat a penny. I wouldn't care because I already have 10% scaled out. But let's just say that, peace of mind and like really all these different factors that you're going to want don't matter whatsoever. This is really what I'm looking at. Is let's say that, it doesn't hit even 74K. Let's say I don't even hit this target right here of 74K with Bitcoin. Then I don't sell it because it's not, to me, it's worth more than 74K. So like, why would I sell a single penny of Bitcoin if it's worth more than 74K? You know what I'm saying? With all these institutions, with all this, I get it that they're all coming in, and we've been talking about this for a long time. That's why we called the bottom on crypto. But, so it's obviously worth more than 74K. Why would I sell any? Like, it would just be dumb to sell any before 74K. And then at 74K, I'm like, okay, I'll take 3.3% of my position out. Well, what are you doing when you sell your Bitcoin? You're deleveraging your risk into the cryptocurrency space, and that's a good or a bad thing, just depending on the overall market. And it's like, what are you going to put it into? If you sell your cryptocurrency, if you sell your Bitcoin's outperformed every single asset class. What are you going to put your money into? I mean, you can put it into real estate. There's pros and cons with that. And, you can put it into stocks. There's pros and cons to that. You can put it into gold. There's pros and cons to that. But no matter how you slice it, all you're doing when you're selling your Bitcoin is you're not necessarily selling it and making profits. Really what you're doing is you're deleveraging your position in the cryptocurrency space. And cryptocurrency has hit all-time high on all-time high on all-time high, and there's no signs of slowing down. So, you know what I'm saying? So, really what we're doing here is we're deleveraging our position based off of, the fundamentals of sustainability on things that we talk about like RSI, MACD, or not necessarily MACD, but EMAs. So, let's say we only hit 160K this cycle. Well, that means that we have essentially 18% of our position out, and we still hold a massive position, almost, what would that be, 88% of our position still? 88, 82, I'm so tired. No, it'd be 78. Yeah, 78% of our position. I don't know. I'm so tired. But whatever the case is, if that's the case, then that's fine because the bear market's going to be very, very short because obviously it's worth a lot more than 160K. And so I have no problem keeping the rest of my position, which I'm still drawing out, in, because like I said, it's going to be, the bottom's going to be like around 40, around 50. So it's like when you're cost base averaging out, you really just want to only cost base average out when you know it's going to be the top, because the top is going to be, but if it's a small top, like if the top is like 120, the bear market is going to be so ridiculously short on that before it goes back up, because there's just going to be so much FOMO, so much demand with all these stimulus packages planned, that it would just make more sense to hold crypto. Why would you scale out? Like why, like the thing is, people are always like, I need to sell my Bitcoin for dollars. But what they don't understand is the dollar is inevitably going down and Bitcoin's inevitably going up. You know what I'm saying? So like just very, very simple, very, very key fundamental points. And that's really where this strategy really starts to shine, is when you start to understand finances and what you're actually doing when you sell your Bitcoin. You're not selling your Bitcoin, you're exchanging it for dollars. And really key fundamentally, like what you're doing is just deleveraging your position, which is just like real estate. If you sell your house in real estate, you're not really taking profits, you're deleveraging your position into real estate. You no longer have that risk to reward ratio in real estate. You're no longer exposed to the real estate market. And that could be a good thing or that could be a bad thing depending on the market. And so that's what we're going to be looking at. And obviously, if we ever hit $1 million in crypto, I mean, that would be a decent time to scale out. And then we can go from there. But at that point, you perfectly take profits, deleverage. And if we do hit $1 million in crypto, that would destroy every single asset class and give you full exposure to real estate, to stocks, to gold, to other things that could potentially outperform Bitcoin. Because why is Bitcoin so hyperbolic in cycles right now? It's because it's massively undervalued for the potential that it has as an asset class. Its job of being an anti-inflationary asset is so ridiculously high in demand and so ridiculously low in market cap, in perspective, in respect. And so it's not always going to pump forever necessarily. And you either have to look at it one of two ways. There's literally only one of two ways that you can look at this. This is genius. Alright, and you're only going to get this somewhere like on this channel. So there's only two ways of really looking at this. The first way of looking at it is that we hit the $1 million market cap right here, or we hit $1 million a coin right here. And then if we do hit $1 million a coin, you have to look at it like this. It's not going to be pumping the same as all these other asset classes because it's going to be overvalued. So when you compare it to something like stocks, real estate, you'd be better putting your money into something else. If we hit like something crazy evaluation like $1 million this cycle, which is, I'm going to be the first to say, well, I think Big Boy already said it, but it's nearly impossible. Nearly impossible. But the key word is nearly. It's like nearly impossible for Bitcoin to hit $1 million in this cycle, or in the next 3 to 4 years. It's nearly in the next 2 to 3 years for sure. It's like nearly impossible. It's still possible though. So, there's only this. The first way is that the cycle does not end. If the cycle does not end and it is $1 million and the cycle doesn't end, it's going to have to slowly go up. It can only go up so fast for so long. And the reason that it goes up so fast and so long or so fast is because we're in cycles. It's not like the entire time Bitcoin's just been pumping nonstop, nonstop, nonstop. We've had cycles. In 2018 it wasn't pumping. In 2019 it wasn't pumping. That's why it's so like insane that we called the bottom. Not even to show the channel, but um, I'm just saying like anybody can win in a bull market. I'm telling you, anybody can win in a bull market. Anybody can win in a real estate bull market. Anybody can win in a stock bull market. Anybody can win in a crypto bull market. The second that table flips, the house takes all their chips back. And that's the difference between me and a lot of these other channels. I got out of real estate at the perfect time. I got out of stocks at the perfect time. I got into crypto at the perfect time, and it wasn't a mistake. And that's really, like I said, if you don't understand the macroeconomics, you either need to follow this channel or you're going to give your gains back. There's no ands and buts. Most people are going to lose massive in crypto. They think they're G's, buying in at 30 and selling at 40. They have no clue what they're doing. Anyways, so there's two ways of looking at this. The first way is that there's no cycle end. And if there's no cycle end and we do end up getting to 1 million, then there's no way, it's not possible for the growth of it to continue as exponential as it is. And when you compare it to other asset classes, it would make more sense to deleverage your risk from Bitcoin into another asset class. The other perspective would be that it is a cycle and this cycle ends at 1 million at the absolute top or right next to 1 million at the absolute top, in which case we perfectly drained our entire position and then we can enter right back in at the bottom again. And if that is the case, then there would be a massive retracement and we would have nailed the top perfectly. There's not another strategy on the entire internet that even comes close to coming up, like even close to perfectly timing something like this. And this 200K, this would be putting 8.8% in at that 200K level. This would be 300K. This would be at that 300K level. From 300K to 400K, 8.8%. And like I said before, it's like, well, what if it only hits 300K? A lot of the biggest experts in the space say it's going to hit 300K. Then we perfectly leveraged out nearly 50% of our position, and we still have 50% of our position in. Why is that important? Well, because if obviously it hits these levels, but then also the levels that it's at right now are most likely going to be next to the bottom in the next cycle. And so if that's the case and the next cycle is the bottom, then why wouldn't you just keep your position, like, so that you're exposed to your position? Because like I said, it comes down to a risk reward ratio and risk to reward stage ratio, like risk, like risk, however you say it. You guys probably know what I'm saying, but essentially, it makes sense to put 50% of your position still in crypto because crypto is most likely still going to outperform for a long time. So selling half your position at 200, that's not a bad way to scale out, and then holding the other half. That's not a bad thing to do because it's like as long as you hold through the bear market, you're most likely still going to have your bag from the bottom. You're most likely going to be able to fill up your bag way down. It's like you could sell out now. At this point, if this was the potential point, and you would sell out right here, and then potentially this is the top, and then you potentially can get back in at 50K. But like but it all comes down to risk to reward ratio. This is literally, we have to look at the exact measurements, but this is literally the perfect risk to reward ratio based off of the fact that crypto's in market cycles. And even if it's not, this still scales it out to 1 million. And when you look at the fact that, so I think I've covered it enough. I just feel like I'm not perfectly describing it, but I think I've covered it enough to where you guys can still understand. But anyways, let's take a look at the chart some more. But I did want to share with you guys that strategy because that is life changing for sure. And like I said, that's probably the most important strategy you will ever see in crypto. That's not financial advice, but like I said, most people are going to give their gains back. And so this is literally the most important thing you could understand, because whether it goes up forever or not, you have to scale out eventually. There's going to be other opportunities at the very least. When people are seeing cryptocurrency as like $1 million a coin, if on some crazy thing, if that ever was to happen, people are going to be like, well, why don't I just buy a house? Why would I buy it? Well, I get that it's $1 million, but I need a house. You know what I'm saying? So there's literally not a better strategy. There's literally not a better strategy. And it comes into macroeconomics, which is something that a lot of people are missing out on. And it comes down to the fact that people aren't humble enough to say that it is impossible to call the market top, and that the only feasible strategy is cost-based averaging out. All right, let's take a look at my computer's being slow. We're shooting pretty high resolution. Should be right here. Yeah. All right. So I'll give you guys one more look at the rainbow chart. Freaking love this chart. This is just one chart though. Don't take this as like the absolute science. This is just one chart. All right. Let's go back to Bitcoin. Because there's a lot of people in crypto right now that are acting like G's, but they just got here and they weren't with us through, There are a lot of people that lost everything in 2019 because they didn't understand cycles, they didn't understand trends, they just didn't understand. Did it hit that level perfectly? Jeez, nice. Well, put another top in the books. Dub City, baby. As in, we called the top, not that that's like, again, so really what we're looking for right now, from a technical analysis standpoint, I'm going to go to another chart. So Coinbase. Let's go down to the hourly. So really what we're looking at right now is every single time that Bitcoin consolidates like this, we have, obviously, we'll pull it up in a second, this consolidation pattern, which we've been talking about before. I'll just draw it again. But what you're looking at is you constantly have, the technical indicator, the MACD, and the MACD shows the strength of a trend. And when Bitcoin's not pumping, that trend weakens. And so as we're consolidating, the MACD is getting weaker and weaker, which creates something called bearish divergence. So really right now, we're looking at boom shakalaka. Let me take a look at some divergence. That's perfect. Let's see. We'll pull it up on Bybit. See how our charts or indicators are looking. But essentially you have RSI divergence potentially playing out, and you go to Bitcoin. So, and you have a downtrend, it looks like, on the 15, which we'll talk about in a second. So let's go to the 4 hour because that's what most people trade. And it looks like MACD is looking okay. It looks like the idea of bearish divergence got negated because the MACD is going down, but the price action also is going down, so they're not diverging against each other. It looks like just a classic consolidation pattern, with this really being like the bottom for sure, but it looks like there might be some touch points on possibly a symmetrical triangle. Let's take a look. Got this one right here. Dang, it doesn't look like. Oh, maybe right there it looks like. Is that it? It looks like that might be it right there. Oh, it's just barely off. Yeah. Bummer. And then oh, look how that might be it right there. That would be gnarly if that was it. That might be it right there. Oh, baby. Oh, baby. Is that 3? Nice. Nice. Yeah, that's perfect. Cute little falling wedge right here. Perfect. And that gives it a lot of opportunity to just bounce around in these levels right here. Before breaking that, huge resistance, flip support idea. And then we were looking at another chart where that 51 was level was absolutely massive. Let me see. Let's pull out some other charts. We are lagging. All right, here we go. So that's Coinbase. So let's go to Bybit. It probably is. Is it Bybit? Guys, did I just call the bottom and the top? So yeah, this level is absolutely massive right here. That's Bybit, and then do we go to? I thought there was a Kraken account on here. I think I say that every single stream. Maybe not. Maybe there's not one. Then yeah, we had this VMAX right here. And this is another idea that plays into the more macro trends right here. So this area is absolutely massive. And you really get that idea of the drop as soon as we break this line right here, kind of validating that trend line. Nice. Okay, so those are really the charts we're looking at. So it looks on the short term, we have that wedge on the hourly, and then if we come out to the daily, this pattern plays out. So there's a lot of room for Bitcoin to drop down and still be very healthy in these consolidation patterns. And then really what we're looking for is volume. And then, like I said before, if you missed it, like towards the beginning of the stream, none of these moving averages are crossing, it looks like. Let's see. This one does not count. This one's crazy. I can't even remember which one that is. It's on the hourly. But you see, like, none of these are crossing for a golden cross that would potentially pump the price up. So really we're just looking at that consolidation pattern and looking for a breakout one way or the other. And I think that's where we're going to get our move. And then the trend's obviously up, so a continuation up is more favorable. So yeah, I mean, really the level that we're looking for right now is Bitcoin breaking. That's on the hourly. It doesn't look like it's going to come up right there. So possibly 52,329. It's going to be the level we're looking for. Ask me questions if you have any questions, and then I'm going to go to bed. Ask me questions if you have any questions. Let me know. And then, yeah, that's pretty much it right now. I got you guys updated. You know, on this channel, I always keep you guys updated. Get you guys knowing what you need to know. And right now, we're just really looking at this level on Bitcoin. As far as Ethereum, we talked about the charts that are very important, which is this one right here. And like while I'm talking, just ask me questions before I go. I'm gonna take this off. Oh, massive. Nice. So yeah, we were talking about this idea right here, which looks to be playing out very nicely. Where essentially you have resistance, resistance all right here, and then this is flipping support. You do have this fractal downtrend right here, which I was talking about earlier, where essentially the price action dumps, comes back up, dumps, comes back up, dumps, comes back up, dumps, comes back up. We call that a downtrend. So it looks like it's finding support right now, but you know, this is really what, you know, as this goes up, essentially Ethereum's going to do well. As this goes down, Ethereum's not going to fare well. And then essentially this is what we're primarily looking at, and it looks a lot cleaner on the higher time frames, and it's a double top formation. Clearly price action comes in from the top. It's pretty textbook, and the measured move is down here, and then this is the support box, which is very nicely factoring in all these different levels that it could definitely bounce off of. So this is the measured move. This is the support box. Really, according to technical analysis, what we're looking at, especially with the fundamentals, not only looking at the charts, but also taking in the fundamentals of Ethereum being extremely undervalued, we're essentially looking at potentially a bounce right here before continuing higher. So basically a bullish retest, and then if that does end up happening, absolutely massive, guys. Let me give you this exact level that we're looking at watching right now. 0.034, and it's on the ticker symbol ETH. slash Bitcoin. And I'm way too tired to explain why this is extremely relevant and important. But if you're in the crypto community for a long time, you already know. And I think I explained it a lot earlier. So, let's see, what else I'll go over ETH for a second, but that's the main thing we're looking at on ETH. And then just ask me questions before I go if you have any questions. And then, this obviously called the bottom right here, but it doesn't look like, I'll keep you guys updated on this, but it doesn't look like there's anything massively substantial right here happening on these different fibs. Let's see, so that is, what chart is that? That's Kraken, so we're gonna go to Coinbase. How does the Coinbase chart not have anything? Oh, it's that, yeah. That fib was so gorgeous. Why couldn't you just extend out more? Makes me so sad. Alright, RIP. So that's Coinbase, Kraken, and then Bybit. Nice. Look how gorgeous these charts look. Guys, these are cute. Like I said, I love the rainbow stuff. I always try and make my charts colorful, but I also try and keep them practical. Alright. That sounded like a shill. It wasn't even a shill. That's literally just, honestly. I seriously, like, this is like a lot of what I do is look at charts all day. So I got to make them look interesting. Alright, so I'm going to cover this again really quickly. This right here, this line right here, we're going to make this one, we're going to call this one Jimmy. And Jimmy is going to be visibility. Trend line, you're supposed to let me color it. There we go. Jimmy's going to be red. No, that's not. Jimmy looks terrible in red. Jimmy's going to be white. And this is Roger. And Roger is going to be black. Actually, Roger looks terrible in black because you can't see. Let's see. Roger's going to be yellow. And he's going to be super thick. There we go. Alright, so anyways, back to Jimmy. Jimmy right here clearly shows this. This isn't a trend. This is a trend line, but this isn't a trend. So a trend takes 3 touch points. What this is showing, this Jimmy line right here, what that is showing, it is showing that there's a potential trend downwards, and really until we break this line right here, it's called a trend, but it's not a technical trend. A technical trend needs 3 touch points. So you have to understand that this is not a technical trend. So this trend line, which is not technical, we needed to see a price break above here for us to not continue in this downtrend into this trend leading down this way. So that's Jimmy, and we did break above this line, and the fact that we broke above Jimmy but did not continue higher, and like look how that's I'm calling that's my boy right there. But anyways, the fact that we broke above Jimmy and did not head higher, what does that show us? That shows us that BTC, wait, let me check at this one right here. Oh yeah, perfect. So even this right here, this one and this one, the fact that we didn't break above Jimmy clearly shows that there's not a lot of buying pressure. And then what is this line right here? This is actually 3 touch points. So you have this touch point right here, you have this touch point, you have this touch point. This is a really fat line, but when you shrink them out, it's not perfect. And so this was more of a potential than anything. But now that I look at it more from this outside perspective, it looks pretty freaking decent. I can't really even see where the blemishes are. So this is a trend line, it looks like. And then you essentially have, let's make this a little bit fatter. This, it looks like, is I don't know. It looks like an ascending with a breakout. And guys, look at this, how gorgeous this is. Breakout, comes down, bearish, no, bullish, retest, hits it, finds support on this level, moves higher. How's my boy ETH looking? And how are we looking as far as the ETH to Bitcoin comparative? It's looking good, but we're going to keep an eye on it. And essentially, yeah, that's really what we're looking for. And then really, as far as, we're mostly covering Bitcoin because we have a bunch of long positions that we've been killing on this channel on ETH. And really what we're looking for on ETH is this. We're looking at Bitcoin. If Bitcoin pumps, ETH is going to pump. We're looking at ETH to Bitcoin comparative. That's going to show how ETH is going to be pumping compared to Bitcoin. If ETH comparative is dropping, then that's not going to fare well for the ETH price. If ETH to Bitcoin comparative is rising, that's going to be good for Ethereum. And then obviously Bitcoin to altcoins, because technically Ethereum is an altcoin. All right, let's see. Yeah, so this is going to be a question. Anything on XLM? I could absolutely cover XLM, brother. Where to long in Bitcoin? Do I wait for lower than 52 or can I long now? Let's take a quick look at Bitcoin and then we'll check out XLM. And then if you have any more questions, let me go. I'll take like 2 more just because I'm really tired. Let's see. But most people don't ask questions, so don't feel like I'll take more if there's a bunch of questions that just spam. Because I feel bad. I want to help you guys out. So like as far as longing it goes, we're in this ascending wedge right here. And so technically, as in like technical analysis and like finances and stuff, like we could, like when it comes to speculating, like really the only thing you can do is really speculate that we're in an uptrend and all these different things and speculate that the price is going higher. But on this channel, like I'm just going to show you. Because I really don't want to be, like, I'm really not trying to be like an asshole, like, but I do have to tell you the technicals. Okay, we'll make this white. Make it white. No, that's supposed to be red. And then this will make white. Okay, so if you were to enter in a long position, if you enter in right here, it doesn't make any sense, and that's not me trying to be mean. Like, it's just literally, like, I have to tell you as a technical analyst, as somebody that's always trading and never losing money, it's because I don't do, like, I know how to trade. That's, like, it's crazy, but most people actually don't know how to trade, and they end up trading even though they don't know how. Let's see. So essentially, if it was to break above this line, so let's go over it really quick, just so everybody's clear. If it was to break above this line right here, this is clearly, this has 1, 2, 3 touch points. This is clearly the trend right here on the 1 hour. So if it's on the 1 hour, trade it on the 1 hour. If it's on the 4 hour, trade it on the 4 hour. If it's on the daily, trade it on the daily. That's my first thing that I'm going to be saying. So you need to take profits early if you're going to be trading this pattern. Early as in, you need to be taking profits on the targets. You hear crazy predictions like 87 and you're just going to run into problems with funding. You're going to run into all sorts of problems if you don't take profits. You trade on the same time frame that you take the trade on. So the first thing you would do is you would have to, we've drawn multiple different patterns, but this is by far the most accurate by far. And then you see that once this wicks down, like, so this is very clearly the pattern on the 1 hour. What you would do is as this price action breaks up, essentially you could cost base average into this trade with a tight stop loss. Definitely not like this. It would definitely be something like this potentially, with an extremely tight stop loss as it breaks through this level, and it's followed by volume. So you would get a volume confirmation. As this breaks through this level, and as, how would you say it? As it breaks through this level and you get a 4-hour close or at least a 1-hour close, you can add to the position. And then it just depends on how conservative you want to be with your stop loss. Really, this would be bigger picture what you're looking at. And then if you get a 4-hour close, you could cost base average in more into the position if you get it above this area, and then you want to see a confirmation of volume. That's how you would trade this. And then I would show you guys how to trade this Bitcoin move down, but I don't want anybody trading it down when we're clearly in a massive uptrend, just even on the micro charts. So like it would just be ridiculous. Like, yes, you could possibly short this, but it's the market overall is bullish, and this is just a 1-hour chart. The other thing you could look at is swing trading. Let's see. And this is on the daily chart. And let's say that Bitcoin was to break above this level right here. So what we would do is we put a long position in right here. And so like a lot of people ask me about opening positions, and I don't know if people are just like, I'm really not trying to be like mean or anything. I'm just trying to tell you the facts so that you don't get absolutely wrecked. I'm literally breaking it down exactly how you would see it in a textbook. I'm trying to be as nice as possible because I really don't want to hurt anybody's feelings. That's not what I would want to do. But really, like when it comes to everything, people are always asking me, should I long, should I short? I have to say patience, and really it comes down to education. So you would potentially open up the long position right here, a small position right here if that's what you were wanting, and then again tight stop loss and a confirmation of volume. Then if you got the volume confirmation and it was going up, then what you would do is you would wait for a 1-hour close, add more, wait for a 4-hour close, add more, wait for a bullish retest. If you get a bullish retest, if the price action comes up, then hits this level and then goes up again, that's a bullish retest. Now you don't want to do is what I always tell people, because I have to tell you guys, we just don't cover BS on this channel. You don't want to set your stop loss, or you don't want to set a limit order right here in case the price action comes out and tests this area right here, because it's called a test for a reason. The price action has to pass the test and bullishly continue higher. So potentially if you do have a breakout of this level right here, you open a long position, potentially you're looking to re-enter right here if the price action hits this level as support. If it falls through it, then this is invalidating this trend line, and you would either need to close your trade or have your stop loss right here. So to answer your question, there's like in the nicest way possible. I'm literally not trying to be any type of way, but there's not a trade in Bitcoin right now, so you would either need to trade it on the 1 hour and stick to that time frame and go through whatever your risk to reward strategy is on this rising wedge, or it's a falling wedge, or you would need to go to the daily chart and swing trade essentially this right here, and then basically scale out right here at 66, scale out right here at, I don't even know, yeah, so scale out on major fib levels, Fibonacci extension levels. That's really the best I can do for Bitcoin, especially right now. But it's consolidating, and really what you're going to be, your best friend is going to be total market cap. So I'll just type it in real quick, and then I'm going to get to XLM. So you look at total, and you just want to see more and more money come in, because the more and more money comes in, the more and more likely it's going to go into Bitcoin. There's also obviously the altcoins, but really, so anything on XLM? Absolutely, brother. Let's see, XLM. Let's take a look at this bad boy. All right. So somebody wanted me to do like a price prediction on this, and I said, well, the only way I can really do that is with Elliott waves, and it looks like we actually nailed it perfectly. What the heck? I mean, as far as this fib level right here. Brilliant. Okay, so, wow. Somebody's like, can you predict the future? And I'm like, I can try. So you have this downtrend right here, and then you clearly have this is called Fibonacci. This level right here is called Fibonacci time zones. And what you'll notice with Fibonacci time zones is as you go up through these Fibonacci time zones, as soon as you hit this level, the price usually seems to change direction. And so that's exactly what you got on that. I guess I'll leave that up. So you have that right there. You have the change in price direction, and it looks like it bounced off of perfectly. It's hard to see the wick, but it looks like it bounced off of this fib level. So you would potentially have this as, so this is the exact, and then I don't know what that is. It's been a minute since I've covered this chart. So this would be wave 1 in Elliott. This would be wave 2. And if you're not familiar with Elliott, it's cool. It's like real, like, just like not a lot of people cover it, but it's 100% accurate if it's in the right context or whatever, which this is very clearly. Okay, so let's just get it out of there because I don't even really want to use it. But basically, it looks like this correction wave's over and it looks like it's heading higher, according to Elliott. Let's see. Really what I want to do is I want to go to the 4-hour and I want to look at the local top and then pull a fib extension. So I'm going to actually get rid of this, get rid of this. It looks like I was doing a Fibonacci cluster. So, which is like also like real tech. Let's see. I'm trying to figure out, because in technical analysis, oh, this is perfect. Yes, sir. Yes, sir. Oh, that's the fib level. Oh my gosh. Oh my gosh. I'm very impressed with myself quite a bit, a lot. Look at that fib level hit. Okay, so this is this fib level hit right here. So then this would be the next one because you have validation right here. So because it hit this level right here, that's like like a lot of times when I log in on the charts, like technical analysis is very fun when you know what you're doing. Okay, so this would be the next area right here, essentially at 0.88 cents. Is it gonna hit it? It looks like it's gonna hit it. You know, it all has to do with let's see. So XLM.D. So XLM dominance. How much people are looking at XLM? Oh, it's on the 4-hour. We want to go to like the weekly with something like this. Wow. This is a like massive double bottom right here. And that is the scammiest wick I've ever seen. Alright. Let's go to the monthly. Now that we have, this is obviously what I was clearly drawing was a double bottom. So price action comes in right here. This is what you need to know if you're an XLM believer. Potentially double bottom, neckline. If it breaks that neckline, we are going to the moon. Let's see. Monthly, and this is a percentage, but they tend to factor out. They tend to factor in. Is there no support and resistance lines on the monthly? Wow. Okay. And yes, you can do technical analysis on these. These just tend to be more advanced. Wow, look how perfect that is. Straight gorgy. Alright, so right there. Right there, yeah. Then right here. I'm working. It sounds like I'm doing some crazy stuff. I'm just working. If you guys are wondering what I'm doing, I'm just going to work. Perfect. Perfect. Boom. Boom shakalaka. So it looks like there's a lot more room for interest. And you have this nice uptrend right here. Looking really good. That's on the monthly. You technically do have, you know, more selling than buying as far as like, but this is a percentage. It looks good. It looks like a breakout right here, but then this is on the monthly, so let me see. Like right there to right there, and then a breakout, but then that would be a failed. Unless, check this out. This is very advanced TA, very advanced, but it is technical. It is all correct. Nice. So what you potentially have is this you know, steady incline, and this is on the monthly. This is massive. This is looking very good. You have this steady increase in volume, which is really good. It means the volume's trending up on the more macro time frames, which is really like you can't really ask for anything better than that. Right here, what you have is this consolidation pattern and this trend line being broken essentially on this consolidation pattern right here, and then you look at it and you say, well, no, because then it pops out right here, but then it comes back right here. Well, if the price or if the oscillator, because you can do trend lines and such on oscillators, if the oscillator does pop out right here, potentially what it could be doing is retesting this trend line right here before moving higher to this measured move. And so we would measure the breakout like this. The other thing you have to factor in is this is on the monthly chart, and this represents less than a month of volume because it hasn't printed yet, and so we could potentially continue this uptrend on this idea. if that makes sense. Like there's still more room to run, so we could potentially set a higher high on the volume and continue that trend with this just testing it perfectly. And that makes sense because we were a little bit more bearish on alts for a second when I was telling you guys it's a good idea to cost base average into alts. And it looks like alt season's here. So that would really be what I'd be looking at right here, is this fib level right here. And then the next fib level would be right here, and we can just draw that. And then basically if this validates and then we get rejected and consolidate at that point, then we'll go higher. But right now that's probably the best target in the game, because I mean that's just how you do technical analysis, and the fact that this one was accurate most likely means that this one's going to be accurate. And then obviously you can just pull up Fibonacci retracements, so there's multiple different fibs. Let's see, so you'd go fib, retracement, and you would pull up this one right here, and then swing low would be right here. Yeah, that's perfect. And really just comparing it like this, you get a really good idea. And you know, it's like when we were talking about breaking through the Fibonacci retracement angles on Bitcoin and really signifying a bull market on Bitcoin. The fact that it's held this area right here and broken above this golden pocket, this fib level right here, is absolutely massive. So it can either continue up, and that would be extremely bullish. The other idea is if it tests this 40 cents area and then continues higher, that would be ultra bullish if it hasn't already. I'm on the monthly, but it's looking good. All the fundamentals I'm seeing, and I'm really zooming out, look good. And because this isn't really a crap coin, so I mean, this isn't really a quick flip in my opinion. But let's see. Now I do hold the XLM. I don't hold a massive amount of it, but just because I like Cardano and things, I have to take this off just so I can. Crap. Just so I can figure out where that wick is. And then really what we want to do is swing high to swing low, and it looks like it really starts to pump right here. So fib. And by this metric, it's yeah, we'll do that right there. Perfect. Alright, and by this metric, it is still in the golden pocket, so this would potentially be a target. And this is just like an absolutely phenomenal strategy. And you might be asking yourself, well, why do you have two Fibonacci's pulled up? And actually the Fibonacci's work on like multiple different time frames on top of multiple different swing highs to swing lows. So going from, you know, you have this one right here, so potentially putting a target right here would be extremely appropriate, because obviously this is on the monthly chart. Of course this is one of the most, trying to talk like NM crypto. Of course this is one of the most important price levels. I'm so tired. Alright. So yeah, you need this one right here. And then adjust that a little bit more like that. So that's perfect. So now you have two price targets right here. And then This level right here is absolutely massive. Although it's already broken it, but just the fact that, so we'll put this one as yellow, just so we don't get confused. So basically, like, this is the golden pocket area. If it breaks that, bullish. I think like in the short term, these are pretty decent targets to really look at. Let me just zoom in on the 4 hour and see if there's any concern, but most of these just seem to be in uptrends, and there's not an entirety to look at. Yeah, I mean, yeah, you're really looking at fibs and such to that, and I mean, if I get more like comments on it, or if you come on more, I'll go in more in depth on this, but this is pretty much what you need to know. Let me see if there's anything else I can think of. Oh, you do have a downtrend right here that looks like it broke out of. Wow. Let me chart that real quick. Trend line. And, you know, I always do wicks, but this looks like a candle body play. So it's got to be 3 touch points. It can either be the candlesticks or the candle bodies. And it looks perfect. It really takes an eye to really understand exactly where to place these. Yeah, that's just perfect. That is just perfect. All right, let's see. And then it looks like this one's going to be right here. And wow. Oh, is this the fib level it broke out of? It didn't look like it broke out of it, but that's looking very bullish. Let's see. And it's constantly hitting like resistance, it looks like, but there's nothing really. So it looks like it's just slowly consolidating up. Oh, this is the last thing I want to look at. Very important, if not the most important in the immediate short term. Jumping straight into the charts. I don't even know how I would do with their accents. Trend based. They should do my American accent. It'd be funny. Alright, it's right there. Right there. Right there. Perfect. Exactly as predicted. Oh my gosh, he is just the biggest meme. He's so good though. He's literally so good. Yeah, so this is what I would be looking at, and this is what a shorter would be looking at if they were highly educated in TA, and this is exactly where a shorter would be closing their positions. And so let me explain this real quick. I'm very tired. Ask me questions if you have any questions, and then I am out of here. And it looks like there's this massive level right here that it's looking at. Yeah. So, yeah, obviously we need to break this, and it's not just the local, it's also this right here, so very important. But essentially what we're looking at here is not a Fibonacci retracement. This is a trend-based Fibonacci, and how these work is basically the inverse of a Fibonacci retracement. It's the exact opposite, and it's from a shorter's perspective of, are we going to continue to drop or are we heading higher? And we have this right here, which is breaking above the golden pocket, basically showing that from a retracement from a Fibonacci retracement standpoint, we are heading higher. So that looks good. Basically, yeah, and then we're looking at those levels. And then let me just pull it up one more time just to totally solidify my point. So it would be this right here. Perfect. So right here, this is the golden pocket. So we breached the golden pocket, looks good, looks golden. Breach this area, even better. But as soon as we breach this level right here, it's game over. It's game over, and it entirely invalidates this downtrend. So this is a downtrend right here, and really what we're looking for is this level right here to invalidate the downtrend, and then obviously there's going to be a massive amount of, like, this is going to be a hard level to breach just because you have resistance, so the possibility of it hitting resistance again and coming back down is big. So then this is obviously right here. Let's see. Horizontal line. So this one right here is like a little area to look out for. And I'll make it white. And then this right here is a big area to look out for. And we'll make this fatter. So yeah, if it breaks out of this level, from a technical standpoint, this is 68% above. It's on Scamwick, but that's just how the cookie crumbles, and it would invalidate this downtrend. And so that's like a short and longer term perspective of what's going on XLM. All right, let's see. Oh, it's this one. Take your time. Interesting. I'm new to this. By when? What's up? Oh, by when the Fibonacci channel? Yeah. It's based off of, you have to take it like, and I was telling some other people this, you got to take it level by level. So it just depends. And a lot of the things that are going to be driving up the altcoins are going to be, obviously the total crypto market cap. A lot of the things that are going to be driving up the altcoins are going to be Bitcoin dominance. A lot of the things that are going to be driving up the specifically XLM are going to be larger cap coins going up. So, like I said, we've covered all this in the stream at this point, but just to answer your question, you got to take it level by level and kind of look at the macro charts, but that's the price target that we're looking at. Just like you'll hear all these other YouTubers say that Bitcoin specifically supposed to hit 53 to 54,000 based off of measured moves. That's the target, and then we basically have to take it level by level. There's so many different things, like you have EMA, MA, which are like golden crosses, death crosses, different charts that end up playing out, just different things end up playing out, and so that like obviously affects the chart. So you just take it level by level, but in the longer term it should play out to 88, as long as those factors, like, because really what pushes an altcoin is not only the fundamentals, but it's also Bitcoin. If Bitcoin just starts pumping massively, altcoins could potentially get wrecked depending on how hard Bitcoin pumps. There's room for it right now because there's so much money flowing into the space for altcoin and Bitcoin to pump at the same time. But if Bitcoin really starts taking off and everybody's like, no, I need Bitcoin, I need to put my money in Bitcoin, and everybody starts FOMOing into Bitcoin, altcoins are going to get wrecked. Do I see that happening? I don't see that happening, but that's just something to like explain, like, the factors that we're looking at, So XLM is really reliant on those more long-term factors, or those more macro factors. I'll take, if there's any more questions, just let me know. I've covered everything in the stream. So if you want to go back, that would probably be optimal for you. But if you have any questions, I don't mind answering anything real quickly. So just let me know if you have any questions. Before I go, about like Bitcoin, Ethereum, we've covered everything, and we pretty much, let's see how ETH's doing. But yeah, we covered everything. I'll just take a quick look on ETH while we're. So yeah, obviously that chart we are good on. But just any questions about anything, even if it's about like, why is Cardano better than ETH? I will gladly answer. But I hold most of my portfolio in ETH. It's gonna outperform it in this cycle, but you guys know oh my gosh, that was literally perfect too. And we literally screwed it up. It's so sad. Let's see. Oh, well, we have the lines drawn for it. Look how cute this consolidation channel is. So this is more the macro trend that you got to look at when you're looking at ETH. Oh my gosh, is it sexy. And then actually we did end up calling the bottom on ETH on a different chart. And I think we were the only channel on. I just got to show that because that's literally the coolest thing ever. If you're just tuning into the channel, we actually like ended up calling, I think like we called the top and bottom on like Bitcoin and ETH like at least 3 times during this live stream. Next live stream we'll keep count. All right. Take your time, I see. So it has to pass 53 cents to go up. Yeah, let me check for you. And then if there's any more questions, just let me know. XLM, USD, what exchange did we use? Kraken. So it's looking really good right now, even on the 4-hour. When you draw this swing high to swing low, like I said, we were talking about this Fibonacci area. Essentially, if something's very bearish, what you'll see is you'll see it come down. You'll see the price action hit this swing low, retrace a little bit in this golden pocket like what you see right here. And then essentially, if it breaks up, that's essentially bullish, which means the price action is more likely favoring the upside nearly entirely. And then if it was to come up, if it was to come down here, then hit this area right here, bounce off of it, and then head lower, then that's essentially very bearish, or essentially saying that the price action is going to head lower. So this is looking good as far as our like indicator, as far as like our short-term indicator. And then right now you're fighting on the 4-hour against a downtrend. You have a high, lower high, or a high, lower high, and then lower high. Yeah, and then you have a low, lower low, lower low. However you look at it, it's a downtrend. And so on the short term. So on the short term you have a downtrend. On the mid to long term you have an uptrend. But to invalidate this short-term downtrend, what you want to see is you want to see a break above this level, a break above this level. And as soon as you break this level, that's why it's fatter, you're 68% above your swing low to swing high. So if you measure this whole thing out, you're 68% above at this point. And that basically at this point in technical analysis, this is the level where essentially you say, okay, we've come up so high against this downtrend that essentially it invalidates this downtrend, because a downtrend in a trend, the trend is your friend until it ends. And as the trend goes down, like when you're in a downtrend, like where's the price action most likely going to go? Well, it's going to rely on like all these different technical indicators and blah blah blah. But when in doubt, it's always going to favor the downside. That's the way you think about it. And so for it to not favor the downside, to negate this downtrend idea, we're looking to break this area. So I mean, it would be massively bullish if it breaks this area, but like I said, on the long term, it's looking very bullish. On the short term, this is a key level to the main concern I have is that it's in a downtrend on the shorter time frame, and this would negate that idea, but it looks like it's already, from a trading perspective, it looks like because it's broken this Fibonacci channel from, this trend-based Fibonacci that it's heading higher. Any question? Yeah, absolutely. All right, I'll just take one more baby look at ETH, and then I'm gonna head out. If you guys don't have any questions, I'll take one more look at the comments. If there's any questions, just let me know. If you have any, like, not about like XLM, but just like anything, like, but if you care about XLM, you can ask about XLM. I don't care. But yeah, if you're looking for other stuff, like if you're looking for like what's going on with Bitcoin and stuff, it's all, we cover like everything in the stream, but I don't mind covering it really quick so you don't have to go back and look yourself. Let's see. Okay, thank you, bro. Yeah, absolutely. Let's see. What you could do is you could definitely, if you were scared on ETH's price, you could definitely, it looks like, draw some trend lines right here. I'll just do a rough sketch of that real quick. And then, like I said, like really when we're looking at Ethereum, this is just a rough sketch of what you'd be looking at. Something like this. And then temporarily bearish if it goes down that support level. That's just a rough sketch, but it looks like it lines up perfectly. And then really what we're looking at on ETH, yeah, you too, have a great night. ETH is, you're looking at the ETH to Bitcoin comparative like we were talking about before. It's bouncing. We'll see what happens. If it goes lower, that's not good for ETH. If it goes higher, that's good for ETH. As far as Bitcoin goes, one of the biggest things you're going to be looking at is BTC.D. And again, we're in this massive area right here. That is a picture moment. It's absolutely gorgeous, baby. And then this is obviously, if you're a little bit newer to trading, this means head and shoulders pattern. And this is a massive downtrend right here. I'll cover this more in depth tomorrow, but you have this massive downtrend on Bitcoin dominance. And basically Bitcoin dominance, if you're newer, is basically just how dominant Bitcoin is compared to the rest of the space. So essentially what this is showing is that 62% of the money is in Bitcoin and the other percentage is in altcoins. As Bitcoin drops, essentially as Bitcoin dominance drops, essentially altcoins pump and Bitcoin tends to consolidate. You have this Fibonacci retracement channel, which has been absolutely gorgeous. And essentially what you have right here is the golden pocket. And essentially if we break this level, this is a very good indication that we're going to be heading lower and continuing this downtrend. Now we have a lot of good reason to think that we are going to be bearish on Bitcoin dominance and alts are going to be pumping. And essentially Bitcoin is most likely going to be consolidating potentially before breaking out of a consolidation pattern and moving higher, which we already covered earlier. But essentially this right here would be one bottom, and then this, if it broke this neckline right here, would be another bottom, and we could potentially double bottom out of alt season. I'll tell you if it happens. I'll tell you, this is really what we're looking at right now. If it breaks up, good for Bitcoin, bad for altcoins. If it breaks down, good for altcoins, bad for Bitcoin. This key level is absolutely massive. That's what we're looking at right now. And then obviously everything you're really going to want to look at is total. So total is total market cap in Bitcoin, and as long as total is going up, the crypto community, everybody's winning. If as long as total goes up, total crypto market cap goes up, everybody's winning, because that just means that there's more and more money flowing into the crypto space, and we just keep setting all-time highs on top of all-time highs. That's why you see so many people winning in crypto right now, and so we want to see a continuation of that. And let's pull this out real quick. You can constantly see that this level right here, the price action loves to come to, and it literally tapped this area and then came back, which I said it was most likely going to do, and I brought to your guys' attention earlier in the stream, looking extremely good. All right. Is there anything else? And then Bitcoin, like I said, you know, biggest thing on Bitcoin, I'm just going to talk about it for one more second. Ask me questions if you have any questions, and then let's see, it's Coinbase. So that's the macro trend that we're looking at. This is looking good. I'll just give you guys a quick view of this that we covered earlier, and then oh wow, is Bitcoin's price falling? So potentially we could definitely find support at that level right there. Let's see. 4 hour. Should be. Oh, that's because we looked at it on the 1 hour. Alrighty. So yeah, I mean, you could short it right here. It's not looking like that would be the smart move to make, but obviously we broke this clear area right here, and the price tanked. I told you guys this was the pattern, and then as soon as the pattern broke. So that's why I said you don't want to long it. Like somebody was asking about longing it earlier, and I said you got to wait until it breaks out one way or the other. And this is why. So I hope I saved somebody a lot of money. Whoever was asking earlier, I hope I saved them a lot of money. I wasn't trying to be mean, I just didn't want them to lose their money. So essentially what we're looking at right here is this major level. So put that right there. All right, so we're looking for this trend line to break. If this trend line breaks, that will be really good for Bitcoin. And we could potentially see a price spike, a spike in volume if we break this consolidation pattern. So really what it looks like and really what it looks like more than anything. I really want to delete this, but it's still relevant, so I'm not going to. This is what you need to know. I'm about to show you exactly what you need to know. Basically, the price action is going to bounce in between these lines right here. Let me draw what I'm talking about. Basically, so this is Bitcoin's price action. Basically, Bitcoin's going to bounce in between these lines like this, and then it's potentially going to break out this way or break out this way. We'll see. Oh my gosh, I didn't know you could do that. Oh my gosh, I've literally never done that. This isn't a trend line, is it? It's literally... What the heck? Okay. Well, that's not even the measured move, though. You'd measure the move. There's quite a few. Yeah, you can't even do that. But it doesn't really matter, because more so than anything, we already have the higher scale measured moves. Really, more than anything, we're just looking to see if it breaks down past this level. We'll see what happens. We're looking for support levels on the moving averages. So pull up this right here, because Bitcoin is extremely bullish. No, we'll do this. We'll do, where's the EMA? 1 minute. 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 1 the 1 hour. Let's go to the 4 hour because that's really what people trade on. Oh my gosh, the moving averages are really down there. And then this is really confusing with the market cipher. Alright, so potentially, like, if we were to break this level right here, we could literally break this level, hit this, and bounce back into this wedge. But this wedge isn't even broken yet. But this is exactly what we're looking for. We're looking for a break and then followed by volume, and then, or if we hit this, I'm expecting like a wick down to here and then bouncing up. We will see. So that's pretty much everything you need to know in cryptocurrency right now. I'll keep you guys updated. I always keep you guys updated. I don't tell you guys just random stuff you need to know. And it looks like there is no questions. So, I mean, I'm not showing my channel, but sub to the channel if you want to be updated. We're going to end with the rainbow chart because I love the rainbow chart. And I talked about the rainbow chart earlier. I just wanted to take another look at it. All right. So yeah, that's basically what you need to know. Well, not basically. That's what you need to know. That's everything. That's what I'm looking at on the charts. Let me see my Ethereum trade. Really, more than anything, I'm just kind of like with the. It looks like I'm going to. What's the funding rate? Oh, in 20 minutes. It ends in 20 minutes. I'm up 7%. Let's take one look at it here. Alright, let's see. Cause like I'm up like massive, like relatively speaking. Like I'm not like concerned about getting liquidated. What I'm concerned about is getting the funding rate. Like, let's see. Yeah, this looks like massive. Like if it was to find resistance anywhere, this would be the spot. Let's take a look at the 5 minute. Just to see how it's. I don't really look at the 5 minute to trade off of. I look at the 5 minute to see it reacting. It looks like it did get rejected right here. Comes down, finds support, and then it looks like it's just setting lower highs. And this is massive though. But that is the double bottom. Yeah, it looks like I'm going to have to close out. ETH is pumping right now, but it looks like I'm just going to have to close out a couple hundred out of this position so I don't get absolutely wrecked by the funding rate, because this trade's been open for a little bit. So that's what I'm going to end up doing, just because it looks like we're just going to get rejected from this level. I mean, I could look at it and really analyze it, but yeah, we'll just take half out. I really don't care. All right, we just made a bunch of money. Cool. All right, I'm out for tonight. Yeah, just sub to the channel and we'll keep you updated on exactly what you need to know. Have a good night, everybody. And like, if you're looking for opportunities, if you're like, what's the next opportunity? Like, we always go over massive opportunities. Like, we covered this long, which we've been a little under 10K in profits, with really the only thing concerning us is the funding rate. Like, if I keep that position open, I'm just going to be paying stupid amounts in fees. So because I'm borrowing, so but yeah, that we got you updated on everything, so you're all good to go. If you want more updates, if you want more on like what you should be doing with your portfolio, not financial advice or anything, but